The birth of Bitcoin was like a thriller movie. Digital gold, digital Ponzi scheme, definitely got Wall Street buzzing. From outright scorn to cautious optimism, financial soap opera unfold. Welcome back to Money Talks, US, China, and beyond. I'm Chris Lee. We've spent the last 3 episodes geeking out over gold and silver. But now it's time for something a bit more, digital. We're diving into Bitcoin and cryptocurrencies as potential anchors for your portfolio in these wild times. So here's our roadmap. So feel free to jump to any sections with the timestamps we show. Now, full confession, I'm not a tech wizard by any stretch. I look at this stuff from an investor's perspective with a dash of common sense. But I do want to give out a shout out to Lynn Elton. With her engineering smarts and financial savvy, her writings on Bitcoin have been gold mines of information. Thanks to her, I've got some cool idea lined up for our next 2 episodes. So buckle up and let's explore the crypto universe together. For Bitcoin, some call it digital gold and the future of money, while others said it's a digital Ponzi scheme. So what is it really? The birth of the early days of Bitcoin, the first cryptocurrency, was like a thriller movie. Picture this. Back in 2009, from the depth of cyberspace, this figure emerges. Satoshi Nakamoto. He claims he's a Japanese guy in his 30s, but here's where the plot thickens. He's dropping hints of British English in his writings, and his sleep schedule totally screams North America. So is he really Japanese? Or are we looking at someone who's a bit of cultural chameleon? Could even be a team, hiding behind one name. His grand vision was to create something like a digital gold. Think about it. A currency as scarce as gold, but with this crazy power. It can zip through the internet, making wealth transfer as easy as sending an email. Imagine if you could send gold through your phone, but it's not shiny or useful for anything other than that. Just this thing that's magically valuable because we all agree on it. And then Satoshi pulled off this magic trick of disappearing. Poof, gone, vanished into thin air. He left behind a treasure trove, over 1 million Bitcoins, which today, wow, we're talking billions of dollars. But here's the kicker. He has not touched a single coin. Why? That's a puzzle we're still piecing together until this day. His creation continued to pulse through the financial veins of the world, changing how we think about money at its core. Isn't that just wild? All right, so let's talk about how Satoshi Nakamoto nailed the digital equivalents of gold with blockchain. Here's the deal. Durability. Gold lasts forever, right? Bitcoin's durability is tied to its network. As long as the Bitcoin network is up and running, your digital coins are safe. We're going to get to why this is a big deal in a second. Divisibility. You can break gold down to grams. But Bitcoin, it's got this digital edge where one coin can be sliced into 100 million pieces. That's some math. Portability. Now, gold is this tangible thing you can touch, count, and move. But let's be real. Most of us don't deal with physical gold. People are all about ETFs, stocks, and futures. With Bitcoin, you're not storing the actual coin. Instead, you've got this ledger out there in the blockchain universe. And it says, hey, this address has this much Bitcoin. All you're really keeping is your private key. Think of it as a super secret number. That's your digital signature. And get this, you can even turn that key into a memorable phrase, a catchy phrase, like a password, to access your Bitcoin anytime. Recognizability and sellability. Now, gold is good because it's recognized everywhere. But there are still hoops to jump through with different country laws. Bitcoin, it laughs at borders. With just an internet connection, you can deal with Bitcoin from anywhere on the globe at any time except for one. Which one? The communist China, as you probably already imagined, is the only country that banned it. But still, it's like having a universal currency that doesn't care about your passport. But the heart of what makes Bitcoin tick is really its gold-grade scarcity and the unique power of its network. First off, scarcity. Picture this. All the gold ever mined would fit in a cube, just 25 by 25 meters. That's about 200,000 tons. And gold miners dig up 2,500 to 3,000 tons each year, with known reserves around 50,000 to 54,000 tons. Pretty rare, pretty scarce, right? Now Bitcoin, you mine it by lending your computer's muscle to verify transactions in its network. And in return, you get a slice of the pie. But there's only ever going to be 21 million Bitcoins. Period. No one, not even Satoshi Nakamoto, can just decide to print more. And Bitcoin's programmed to make miners work harder for less over time, thanks to these events called halvings, which happens every 4 years or so. When it happens, boom, the reward gets chopped in half. This keeps going until the 21 million limit is hit. Now we're already close to 20 million in circulation, making it as scarce as, well, gold in the digital realm. But here's where it gets wild. Anyone can cook up a new cryptocurrency because Satoshi shared the recipe wide open. We've got thousands now, right? Each one might have its own built-in limit and scarcity, but when you zoom out, the total numbers of cryptocurrency that can pop up, infinite. So for crypto to really hit the big time, they've got to have just a few big players holding most of the pie. So far, Bitcoin is like the cool kid on the block, keeping its market share strong, even as more and more coins pop up. Now think of Bitcoin like a social network. But instead of sharing cat videos, they're moving value around. The more users, the more secure, the more valuable it gets. Thanks to what we call network effects. Bitcoin got there first, so it's like the king of the hill, with the most users and the strongest security. Here's a fun one for you. So how many Bitcoin miners does it take to change a light bulb? 1 million. One to do it, and the rest to verify he did it. That's because Bitcoin security is like having an army of miners, doing the calculations at the same time, making super tough and expensive to attack. The computing power of Bitcoin, measured in hash rates, is off the charts, way beyond any other cryptocurrency. Now, when folks say Bitcoin's being hacked, it's usually someone's personal security that's the weak link. Like misplacing your home keys. Keep those private keys in cold storage, like a safe, no connection. And your Bitcoins is as secure as Fort Knox. And what about those quantum computers potentially cracking Bitcoin code? There's a plan for that too. The network can evolve, making it quantum resistant with enough community backing. Bitcoin also got these interesting self-regulating features. Every couple of weeks, it tweaks how hard it is to mine new coins. If mining is too easy, we flood the market. If it's too hard, and the miners might pack up. So Bitcoin's like, hey, let's balance it out, automatically adjusting to keep mining profitable and the network secure. It's the cool trick that encourages more computing power to join the party, making attacks against it even tougher. Now imagine if a new crypto comes along, trying to be the cool kid on block 2, but they've got a problem. They start with less muscle, less users, less computing powers than Bitcoin. It's like trying to build a fort when the Bitcoin already has the ultimate castle. Bitcoin has been around since 2009. giving it this massive head start, making it secure and trusted. And there's a thing called Bitcoin Dominance Index, showing its market share of all cryptocurrencies combined. And Bitcoin has been through some wild swings too. From 100% when it was the only game in town, down to below 40% in 2017, back up to 60%, then down again with the Dogecoin hype in 2020 by Elon Musk. But guess what? After the FTX drama in 2022, it's back to about 60%. So it's like a Coca-Cola of the crypto world. No matter how many new sodas pop up, Coke is still the king. Okay, now let's tackle these questions. Is Bitcoin just a fancy Ponzi scheme, as someone claimed? The short answer is not really, and here's the scoop. First off, what's a Ponzi scheme? It's like a financial pyramid where the early birds make money off the latecomers, right? With no real profit behind it. Just empty promises of high returns with little risk or no risk. Sounds shady, right? Now let's look at Bitcoin. They got open book and transparency. Bitcoin was launched with a white paper for all to see. Satoshi didn't just drop this on us. He shared all the secret, how it works. The code behind Bitcoin, it's all out there in the open. Anyone can poke around, audit it, look through, and even suggest improvements. Ponzi schemes, they love their secrets. Bitcoin does not have any Ponzi-like promises. Bitcoin doesn't whisper sweet nothings about guaranteed returns. Its value can swing like a pendulum, often wildly. That's the opposite of a Ponzi's "you're definitely gonna make money" pitch. And there's no pre-mine, unlike some other cryptos where the creators give themselves a head start by mining coins before anyone else. Bitcoin was fair game from the get-go. Anyone, you, me, could get into mining from day one, just like Satoshi did. And here's the kicker. Satoshi never cashed out his stash, which kind of goes against the whole quick profit vibe of a Ponzi, right? And here's the real deal. Bitcoin's value doesn't come from some magic trick where the new investors fund the old ones. It's more like any other commodity or currency. Its value grows with use and adoption. Think of it as a network effect, not like some Ponzi effect. So Bitcoin isn't pulling the wool over anyone's eyes. The value comes from use and the trust in the system, not from tricking people into a cycle of investment. Yes, there are risks, maybe even huge risks, as with lots of other investments. But at its core, it's not built on deceit. So, Bitcoin is definitely the topic that's got Wall Street buzzing. From outright scorn to cautious optimism, with a few full-on believers in the mix. It's like watching a financial soap opera unfold. Start with the skeptics. Jamie Dimon, the JP Morgan CEO, once called Bitcoin a fraud back in 2017, suggesting it should be banned. Fast forward to 2025, and while his bank now offers Bitcoin ETFs, he still thinks Bitcoin is worthless, likening it to a pet rock. He's like, you can trade if you want, but don't expect me to join the fan club. Warren Buffett, the Oracle of Omaha, isn't buying into Bitcoin hype either, branded as rat poison squared in 2018. But in a twist of irony, his company benefits from crypto through one of its portfolio companies as well. Bill Gates, he's not a fan either. Gates sees Bitcoin as unproductive, more about speculation than real economic benefit. But you got supporters too. Elon Musk, he's the wild card. Musk has been a game changer for the crypto scene, especially with Dogecoin. And he's got Tesla selling crypto merch, SpaceX playing with crypto, and he's even hinted at crypto payments on X. His tweets can make or break market trends, literally. Mark Zuckerberg He dipped his toes into the crypto pool with Deem and Novi projects, but regulatory waters get too choppy, leading to the project's closure. But still, it shows his interest in the space. And don't forget the converts. Ray Dalio started off skeptical, but has come around to see Bitcoin as an innovative asset class, akin to gold. However, he's cautious about how governments might react to its growth. Larry Fink, the BlackRock CEO, went from seeing Bitcoin as a vehicle for illicit activities to now managing significant Bitcoin funds and launch a Bitcoin ETF as well. He's now talking about it as an inflation hedge. Stanley Druckenmiller and the Paul Tudor Jones, these investment gurus have jumped on a Bitcoin bandwagon, viewing it as a protective measure against inflation too. And Ken Griffin, he once compared Bitcoin to the infamous tulip mania, but has now since admitted he might have missed the boat. So finally, let's chew on this big question. Is Bitcoin the new digital gold? First up, gold. It's got this ancient street cred. Thousands of years of being the go-to for money, right? Gold has got charm. It's durable, divisible, and everyone knows what it is. The history makes it a pretty safe bet, with less wild swings in value. Plus, you can hold it in your hands. No need for any network to back it up. Now, Bitcoin, it's the new kid on the block. It doesn't have millennia behind it, but it's got some serious potential. With a market cap of around $2 trillion now, part of the 3.5 trillion total for crypto market, Bitcoin's got this wild side with huge potential for both gains and losses. Investing in Bitcoin is like a betting on its network effect, how it keeps growing its user base, how it protects itself from attacks, and how it might evolve to fend off challenges like quantum computing. Here's the kicker. Bitcoin's network effect is both its superpower and its Achilles heel. It's what makes it valuable, but it needs constant vigilance. Personally, I'm a bit more of a gold and silver fan, but you cannot ignore Bitcoin's growing adoptions. With major investment committees now nodding in its direction, it might be smart to sprinkle a little Bitcoin into an investment mix, just to hedge against the craziness of the financial world. So we're going to dive into Bitcoin's valuation and how to get your feet wet in the crypto pool in our next episode. So stay tuned. It's going to be a wild ride. Thanks for tuning in. If you like what we show here, make sure you subscribe, like, and share. And tell us what you think in the comment. And hit the bell so that you don't miss any of our episodes. See you soon.